Today, we're diving into the recent happenings with SoFi, which saw quite an eventful trading day. As the market opened, chaos ensued with SoFi's stock price plunging to $6.69. Kudos to those who seized the opportunity and bought the dip. Remarkably, it bounced back quite well. Let's break down the crucial data points and everything you need to know from today's trading action.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Despite the day's drama, SoFi ended up closing in the red, down 58%. However, looking at the bigger picture, SoFi performed phenomenally well. It's essential to understand why this happened. Although the specific reasons behind today's buying frenzy are unclear, institutional activity played a significant role. Interestingly, these transactions occurred on the secondary market, and it's not the end of the quarter, so it's not due to rebalancing. Today, the market was rife with fear, largely due to expectations around the Federal Reserve's potential rate hikes and prolonged higher rates. This anxiety was fueled by last week's FOMC meeting minutes and a recent speech suggesting similar concerns. Today's market reaction seems to have been an overreaction to this information, which institutions likely recognized, prompting them to buy the dip. Notably, there were several large transactions involving SoFi stock, with purchases like 14 million, 351 million, and 217 million shares. Even after hours, activity was intense with trades such as 965 million and 189 million shares. This surge in institutional buying is intriguing, especially since there wasn't any significant news or recent SEC filings, except for a form indicating insider buying by Anthony Noto, SoFi's CEO. This insider purchase might have instilled confidence among institutional investors. Interestingly, prominent investors like Cathie Wood haven't been active in SoFi recently, which points to other significant entities making these moves. On the flip side, short sellers also doubled down today, increasing their positions by 352 million shares. Observing the intraday activity, short positions spiked significantly when the market opened but started to decrease as the day progressed. SoFi's short interest stands at 17.65% of the free float, which translates to 183.33 million shares, with an average borrowing cost of about 92%. The utilization rate is at 74.54%. There's some mystery about which brokers are involved in these short activities, but Fidelity is a possible candidate. Turning to options activity, today saw $377 million in call options and $151 million in put options. The sentiment was quite bullish, with 45% of the options being optimistic. Most of the call options centered around the $7 strike price, indicating a positive outlook, even though options themselves don't directly move stock prices. This sentiment gives an overview of market expectations. Looking at the open interest for call options expiring this week, there's a significant wall at $7 with 25,000 to 26,000 contracts, suggesting that SoFi might struggle to surpass the $7 mark this week. With only 2 trading days left, any significant movement would require unexpected news or data. Keep an eye on GDP data tomorrow and the PCE index on Friday, as these could influence market sentiment and possibly SoFi's stock. Recent analyst ratings have been sparse. The last rating, issued 16 days ago, came from Mizuho with a $12 price target. Analysts' opinions might shift based on upcoming economic data, which could hint at future rate cuts, alleviating current market fears. In terms of dark pool activity, which is typically dominated by shorts, significant trades were made today. SoFi closed at $6.85, trading between support level S1 and the pivot. The day's low was $6.69, bouncing off support level S2. For the next few trading days, watch this support level closely. The S1 level didn't hold well today, breaking quickly, making S2 a critical support to monitor. The day's high was $6.85, indicating SoFi is currently in a kind of no man's land, with the next significant resistance at the pivot point of $6.99 and the $7 wall due to options resistance. Given this setup, it's fair to assume SoFi might not surpass the pivot point this week unless something unexpected occurs. On the technical chart, SoFi is in the lower percentile of the Bollinger Band and below several key moving averages. There is a slight bullish sentiment indicated by the white line crossing above the red line, but the stock remains oversold at a 15 RSI. Retail investors have been relatively inactive since the 20th. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.